Companies have long claimed to be green, but there's a difference between sunny public relation campaigns and concrete corporate disclosure. From China to the US to Europe, market regulators are pushing companies to disclose the material financial risk of climate change in a specific and structured way, and to ramp up greener investment mechanisms, including green bonds. Nowhere is the shift more potentially sweeping than in China. To share insights on the cost of being green, please welcome Young-Fu Chun and Yin Hong with Fortune's Jeff Ball. But first, our partner Refinitiv has some insights on green finance, so let's take a look.
Good afternoon. Thank you for being here. I know the afternoon is getting late, but we are, as Clay Chandler said earlier, starting to get increasingly to the nub of the issue. If we've done this conference correctly, you're going to start to get tired of hearing the notion that what we're trying to do here is to explore how issues of the environment and sustainability are moving from public relations to core corporate strategy. And the question, though, is whether that movement is sufficient to make meaningful environmental change. We've been peeling back the layers over today in various industries. You've heard about energy, you just heard about textiles, and now we're going to get to an industry that is perhaps the most bedrock fundamental industry in the economy, and that is finance. I want to just tick off quickly 4 things that have happened quite recently that add up to, I think, a tectonic change that we're going to explore here in this session. In June, in the United Kingdom, the Bank of England said that it will require insurance companies to assess the risk that insurers face from climate change as part of what the United Kingdom calls a stress test, what the insurance industry calls a stress test, a test of the financial health of insurance companies. The same month, in June, in France, the governor of the Bank of France said that central bankers around the world should consider exposure to climate change, a bank's exposure to climate change, in deciding how much collateral the central banks will require from banks when the central banks loan money to banks. Here in China next year, as a result of a decision by the country's securities regulator, all publicly listed companies will have to disclose environmental risk data, including climate risk data. And as a bottom line, if you needed any more persuasion, Moody's, the rating agency, has said that in 11 sectors across the global economy, there is $2 trillion worth of debt outstanding, trillion with a T, that is at risk because of climate change. So, we have here 2 people who are really in the middle of this in China, which, as you've heard again throughout this whole discussion, is the country that matters most in this. And we're going to start with Yin Hong. Yin Hong is at the Industrial and Commercial Bank of China, ICBC, which happens to be the world's largest bank by assets totaling about $4 trillion. And Yin Hong has been engaged for many years in an effort to bring to the fore what will strike you as a buzzword, green finance. But we're going to try to unpack that term. We're going to do two things here. We're going to talk a little bit about what that includes, and then we're going to ask the question of whether it's actually doing anything. Is it big enough to actually do anything? And then we're going to leave plenty of time for your questions. So I want to start, Hung, with one question having to do with something called the stress test. So I mentioned that the UK has imposed a stress test on insurance companies. The ICBC has been engaged in essentially looking at how risk from climate change affects the financial health of a whole range of industries, including coal and steel. And partly because Yang Fuchang is quite involved in coal as well, I want to ask you to unpack for us, what is the ICBC doing to force the coal industry to look at its exposure to climate change? And then what is the ICBC doing with that intelligence that it gathers?
Thank you, Mr. Jeffrey. Let me speak Chinese.
Thank you, Jeffrey. I will speak Chinese to answer this question. As Jeffrey has pointed out, ICBC has been the first bank to deploy stress testing to assess the impact on the risk exposure of commercial banks as a result of climate change. Back in 2015, we started using stress tests to calculate the amount of climate and environmental risk faced by a commercial bank like ICBC. Back in 2016, at London Stock Exchange, we issued this report, receiving a lot of feedback about it. And the key achievement is like this. First, we are using stress tests to quantify the risk and environmental risk or environmental exposure to see how big is the exposure or how severe it is, so that commercial banks will be able to take targeted measures in response to the exposure. Second, the methodology of the stress test, technologically speaking, is to conduct the analysis all the way through our customer base. And the conclusion is the credit rating of our customers will be impacted with the presence of environmental or climate exposure. Their debt service capabilities might be compromised, thus giving rise to credit risk on the part of the lenders, the banks. So far, our stress test has incorporated all the key energy-consuming, heavily polluting, and resource-intensive sectors. For example, we have covered thermal power, cement, iron and steel, alumina, and water risks. The water risks alone cover 15 subsectors, and also we're also looking at risks associated with carbon trading.
And talk for a second about coal. And what have you found in the coal stress test? Have you found a large difference among different coal companies in China in terms of what you regard as their climate exposure? And then number two, what have you done with the bad actors? They're paying more for debt from the ICBC. Is that the end result?
Yes, we've done that. In China, at the very beginning, we focused on coal-fired power plants. And because we believe the consumption of coal is a key contributor to climate change with CO2 emission. In China, in the electric power industry, coal accounts for a very big part. For the key commercial banks, coal-firing power plants are major loan customers. If there is growing risk experienced by that sector, it might worsen our asset quality. So we identified coal-fired power to start with in our stress testing. And China is enhancing its environmental protection standards, pushing the overall economy to go green. The green companies and green industries are encouraged to grow faster, while resource and energy and pollution-intensive companies are being restricted.
The result of this exercise at the ICBC is that coal companies that are seen as more climate riskier, have to pay the ICBC more for debt than other coal companies do. Okay,
Yeah.
So do we have a microphone handler in the room? And Priscilla Liu, where are you? So could you please bring a microphone over here, and we'll come here in just a second. Fuqiang, I want to ask you, you've been involved for many, many years in trying to shift the needle, to move the needle in China away from coal in the electricity system. We've heard signs, in fact this morning, indications that China's coal use may peak earlier than people thought, and therefore its carbon emissions may peak earlier than people thought. Is everything that Zheng is talking about, green finance with regard to coal, actually behind the shift away from coal in China? In other words, are all these fancy finances really doing anything in the coal sector? Or is what is happening in coal happening for other reasons, and is green finance not doing enough to make it happen faster?
Yeah, my answer simply is yes, because...
Yes, what?
Because the banker now, they have faced a great risk if they still invest in the coal industry. We understand now China have the coal consumption have reached the peak already by 2030, not after. So I think that is give a pressure. You compare to before is now compared to the 2013, and China coal consumption reduced 400 million tons already, and so some small, medium, and small coal mine now is bankrupt. Even though that large-scale coal company and still facing difficult to get financial support from bankers. And so far is bankers now they are in a high risk, and maybe they cannot get a return of their investment in a coal company.
Priscilla, I just want to ask you, can you stand up? So Priscilla Liu is at DWS, an asset management firm, but also is a member of what's called the Green Finance Committee of the People's Bank of China, the Central Bank of China. And Priscilla, you seem to be on airplanes all the time. So you have a global context here. And I just want you to kind of pull the lens back for us and give us a sense of how much difference what we're talking about here is making in the finance system and therefore in the energy system, and how what China's doing fits into the broader global picture.
So I think something that's in China that's unique is that led by the PBOC, the banks are working together with an awareness as well as guidelines for issuance of green bonds and also criteria for assessing risks in terms of loans. That is kind of a semi-standardization effort, although it is not, technically stated as standard. But the community of banks that are in this forum, in the Green Finance Committee forum, is sharing their thoughts, their experience, and also the work in terms of the loans that they are issuing and the risk and so on. And that cooperation and discussion and collaboration, if you will, in understanding how to continually improve through the experiences of the various banks that are in this committee, which is all of the banks in China, is really moving it a lot faster than anywhere else in the world, because there isn't that collaboration elsewhere in other countries.
And your sense is that as a result of that, the emissions profile in China is different from what it would be otherwise?
We don't. It's too early to say, but I think that that sharing of experience, that sharing of really working together to understand how to improve and help make it better, in general, is helping to move the needle faster.
But still early days.
I believe so, because the Green Finance Committee, of course, still is only let's say, 5 years to its beginning.
Okay.
And I think that the banks have only started to really work together. The first issuance was 2016, and so so I think that it's too early to say, but I believe that sharing and that collaboration and cooperation and working together is very important. Of course, ICBC is very active and has been very instrumental in leading the charge in this area.
Great, thank you. Hal, Harvey, where are you? Hal, can someone get a mic to Hal, please? So let me ask, while that's happening, the two of you something else. We have little time for this session, so we're moving quickly, but we talked about essentially a push which is the bank saying company will pay more if you are dirty than you will pay if you are green. I want to talk for a second about a pull, which is company will pay less for debt if you are green. There is a fancy term called a macroprudential assessment. This is an assessment that a bank does of the financial health of a company that wants to borrow money from a bank. And there's a really wonky but interesting effort going on, particularly in China, that would integrate in a core way a bank's assessment of a company's environmental risk. And to the extent that the bank sees that the company's environmental risk is lower, that is, that it is a cleaner company, that company would pay less, would actually get its lending costs reduced. Fuchang, do you have any insight into whether that's actually changing anything, for instance, in the coal sector or in energy-intensive sectors?
Yeah, in the coal sector, if you say pay more or less, my question is not that question. My question is a bank, they can cover their investment or not. Maybe payback is zero. So that is a high risk, for instance.
Because you prognosticate that coal may go bankrupt regardless of what it's paying on its debt?
Yes. For instance, for the medium and small coal mines, many is bankrupt. And so the bank actually wastes the money. And for coal power plant, now China overbuilt coal-fired power plant already. If you invest, and that is a huge sustained cost, you will not recover.
And Hong, what about that? I mean, is it, Fuchang is essentially saying that the preferential lending rates for dirty industries are not preventing the expansion of dirty industries.
Yes.
Do you agree with that?
Yeah, I agree with that. And I have a data could share with everyone in this room. 有一个数据，我觉得可以。
One data could be shared with you, because ICBC realized that coal-fired power generation is facing increasing risk. So when we adjust our portfolio, we have been doing portfolio readjustment for a fairly long time. Every year, when we make investment in power generation, 77% were invested in clean energy. The rest, less than 30%, was invested in coal-fueled power generation. So in our power generation portfolio, 60% is clean energy. The reason?
It didn't used to be 60%.
Yeah.
Okay. I'm sorry to do this, but I want to cut you off and I want to go to Hal for a second. There you are. So do you buy this, Hal? You buy the notion that that preferential lending can significantly move the needle in an economy like China's to achieve the sorts of results that you just told us the world needs to achieve?
So the word one has to be very careful with is preferential. Capital finds returns, and more specifically, it finds risk-weighted returns. If coal plants are more risky, they should be priced more highly. I completely agree with your panelists on this. What I find troubling is when you offer concessionary finance for green. In other words, if you tell people you have to accept a lower return in order to build a solar farm or a wind farm, then you're self-limiting, because most people won't accept a lower return over time. It has to be a reasonably risk-weighted return. Let me turn for 1 second. What does that mean? There's a bunch of risks you face if you want to build a huge solar farm or a huge wind farm. Can you get it sited? Can you get transmission access? Can you get the construction permits? At what price will you sell the power? Those risks raise your cost of capital, as they should in a good capitalist economy or a good free market economy. But government can drive those risks way down by pre-zoning siting, by pre-specifying power purchase agreements, by pre-issuing construction permits, if you meet all the right criteria. So the way I think to use the financial system is to take advantage of what it does, capital finds risk-weighted returns, and reduce all those risks a lot, and then the capital will really flow. You don't have to call that a green bond. You don't have to reduce, you don't have to change the very nature of capitalism. You simply have to restructure the deal so that more capital flows.
Hong, do you want to comment on that? That it's the notion that it's actually not so important to reduce the lending rate. What's more important is to create broader conditions in which the market's wanting the green stuff.
是的，我觉得他讲。
I totally agree. I think what has been said is completely correct. In my view, for banks, when we choose customers, on the one hand, we will check the individual profitability of individual product. We will also research into the overall risk of the whole sector. Probably one project is profitable now, but the future prospect is challenged by climate risks. Then for the overall coal sector or coal-fueled power generation, in our decision making, actually we have a prior readjustment towards the sector. 我也想补充，我也希望您能补充，但是呢，我又看到了下面的这个3个0， 1秒钟。
We put in the green bond or not. Actually, it have to move out.
Out of the green bonds. Okay, thank you very much. Obviously, more to talk about. Thanks so much for your time.
Thank you.